Hello again, everyone. This is Ken Martinez with Mark Investments, introducing the next video in our series of the cash flow calculator, Owning the House. So this tab is really calculating the cash on cash return if you're flipping or keeping a house as a rental. Each of these is really a full day seminar, so I'm not going to go into too much detail other than the fact that at some point, whether you're buying loans or you're not buying the loans, you're going to have an opportunity to buy a house and either flip it or buy a house or keep it for a rental property, and you're going to want to evaluate your cash on cash return on that residential house that you just bought. I just want to highlight a couple of points on the left side over here for flips, and the main thing is really that in order to make this calculation apply to any house in any city in any state in the country, I really need to use percentages as I calculate the expenses, and I need to use a square foot to calculate the ARV. So that's why I use these, so that way no matter where you are, even though the dollar per square foot that you're purchasing prices is going to vary tremendously by region, depending on the price of the house, the ARV, you should be able to adjust your dollar per square feet so that when you multiply these two, you're going to get the ARV. You'll just need to adjust this, and even though you may not be buying your house based on a price per square foot, you certainly could calculate the ARV based on that. So that's the first point I wanted to make. The other point I wanted to make is, when you flip a property, they always talk about, at least when I first learned about real estate, the 70% rule, which is this right here. The most you should pay for a property is 70% of your ARV less expenses. That's your max bid. So I have that here in black. And you can adjust that depending on the area. Maybe you want to do 75%. It's based on this percent over here on the right in the blue box. Anyhow, this 70% rule, like I'm out here in California, and this 70% rule really works well when prices are in that. In fact, I put down the notes down here in the 100 to 300,000 range. The more expensive the property, the 70% ends up being, or that 30% margin ends up being huge, and the lower the property, it ends up being not enough. So I've given you a different way of also estimating what you should be purchasing this property for, which is the fixed cost method, and you'll just need to estimate what your profit is going to be and what your fixed costs are, and then use this formula, ARV minus fixed cost minus the profit rehab is your max bid. So a couple of things to look at depending on what type of house you're buying. Is it sort of very on the high or low end, or is it right in the middle? Will guide you on what you should be, what your max bid should be for the property that you're buying. And the only other thing I'm just going to mention here is at the very bottom, these calculations do calculate an annualized cash on cash return. And that's based on whatever you put over here in this cell. So a lot of these expenses, like the property insurance, I am asking you to put in the annual property tax and insurance, and then depending on what you put here for the number of months, it's going to prorate everything. So for 6 months, we'll cut it in half on your the cost of your insurance, and so on. So over here on the rental side, same thing again. This is really a whole day seminar. I won't go into too much detail other than to say that that it is all the standard things you want to look at in terms of calculating an income statement. I have most of the expenses, the expense categories that are associated with a rental property. You'll need to, if you want to expand this for an apartment, you're going to need to add more here. But this is probably the most common thing for a rental property, residential that is. And then at the very end, it does calculate your annualized cash on cash return. And then I've also included The most common metrics you may want to evaluate besides the cash-on-cash return when you're evaluating a rental property, at least to purchase, and does it make sense as a rental. So you kind of put what your target is. If you want a 10%, this will actually tell you if you're meeting it, yes or no. If you're interested in evaluating based on a cap rate, 8% is probably pretty good. Some areas do look at price per square foot and rent per square foot. Anyhow, the 1% rule, that's pretty common, or your debt coverage ratio. So all of these are really the key metrics you want to look at rental properties. Kind of put what your targets are, what is appropriate for the area you're buying in, and then this will let you know if you're hitting it or not. Something else to consider besides the cash-on-cash return. So that's it for this. The next tabs are similar to what you've probably seen in the other videos. This is going to calculate for a given loan amount, what is your loan based on various interest rates and various number of years. And you could use it as it is as guidelines, or you could do something very specific. You could do, for instance, 87,000 at, and if you wanted to do a specific number of years, I want to do 17 years. It will do that, and I want to do the, let's say 4.3. And it would calculate that for you. So if you just want to do something specific, again, input your numbers in the blue cells, or just leave it as it was to give you some guidelines of where your monthly payment's going to be. And that's that. The next one is the per year, and this is really the same calculation. The only difference is now for a given set of years, we want to see the differences that an interest rate makes, and then here's your loan amount down on the end. So if you want to do calculate for 30 years, just leave it. But if you want to do, for instance, 25 years, since you have a shorter amortization time, your payments are going to increase. Or if you want to do a 15-year loan, anyhow, you can adjust those as you need, and you have all your answers for what your monthly mortgage is going to be for this amount at this interest rate at this for this number of years. And again, you can input a very specific number here if you want to change it, and then just look at the intersection of these. So that's it. And so that's the section on owning a house, a brief section, but again, this is Ken Martinez from Mark Investments, and if you want to know how you can invest for your own business in the cash flow calculator, just email me at mark55llc@gmail.com. Thank you.